A lot seems to be happening in the financial sector of the economy, with indicators at the weekend pointing to impactful macroeconomic fundamentals. But same cannot be said about the capital market, where investors lost 239 billion naira in 4 trading days. Plus, oil prices declined marginally at the weekend. This is Business Express, reaching you from the network service of the NTA. I am Amina Nujaim. You're welcome. In the news today, President Muhammadu Buhari has officially declared to recontest in the 2019 presidential election. The president made this declaration during the National Executive Committee meeting of the All Progressives Congress APC. Already, there are speculations that this would calm the uncertainties in the nation's economy, consequently leading to positive outcomes. And as President Muhammadu Buhari leaves for the United Kingdom this Monday, he is expected to go into discussions with the Chief Executive Officer of the Royal Dutch Shell, Mr. Ben van Beurden, over the Shell and other partners' plans to invest $15 billion in Nigeria's oil industry. These investment ventures will lay the foundation for the next 20 years' production and gas supply. It is expected to bring attendant benefits to both the economy and the society. As part of the central bank's development finance strategy aimed at diversifying the economy, Governor of the Apex Bank, Godwin Emefiele, says arrangements have been concluded with the financial institutions in the country to disburse 60 billion naira to MSMEs and other critical sectors of the economy. Mr. Emefiele stated this at an economic forum in Lagos.
Given the indispensability of finance, the entire international community, including the United Nations member states, multilateral institutions, civil society groups, and the private sector have adopted the contemporary concept of financing for development to update the mechanisms and tools of financing flows, or financial flows, in order to fund initiatives for economic growth and development. Accordingly, emphasis on financing economic growth and development is distinctively placed on inclusiveness, accessibility, human capital, and factor productivity. It is no news that the level of credit in the domestic economy channel to productive private sector is critically below the levels required to place our economy on the path of balanced, sustainable, and inclusive growth.
The Chartered Institute Bankers of Nigeria, CIBN, has commended the federal government over the foreign exchange policy through the Central Bank of Nigeria, CBN, instituted in 2017 that stimulated the growth of small and medium enterprises in the country. The outgoing president of CIBN, Professor Segun Ajibola, who spoke to journalists in Lagos, said in order to facilitate access to finance in 2017, the federal government also assented to the Secured Transaction in Movable Asset Bill and Credit Reporting Bill, among others. Ajibola noted that it helped over 10,000 SMEs to access funds using their movable assets and credit, Reporting Bill 2017. The federal government recently certified some companies to begin export of fishery products to the international market following accelerated growth of the subsector. This is with a view to developing the country's indigenous culturable fish species, among others. Other things have been a concern over Nigeria's net importation of fish and fishery products, and the Federal Ministry of Agriculture and Rural Development has directed all fish importers to go into the backward integration through commercial aquaculture, which involves ponds and cage culture. Presently, Nigeria has a huge fish deficit of 2.1 metric tons. OPEC prices of 14 crudes dipped at the weekend, but early Monday data showed they have found a higher ground. Next is a graphic representation of the commodities as compiled by Muplang Dakok. Stocks ended bearish in the past week as market capitalization shed 239 billion naira. Let's have details with Bosede Abel.
It was another 4-day trading week in the week ended because of the Easter holiday celebration. A total turnover of 1.76 billion shares valued at 26.5 billion naira in 20,265 deals were traded by investors on the floor of the exchange. The NSE All-Share Index depreciated by 1.60% to close the week at 40,841.14, while market capitalization stood at 14.75 trillion naira. The financial services industry, measured by volume, led the activity chart with 1.4 billion shares valued at 18.7 billion naira traded in 12,850 deals, thus contributing 83.18% and 70.43% to the total equity turnover, volume and value. The conglomerates industry followed with 127 million shares worth 623 million naira in 971 deals. The third place was occupied by consumer goods with a turnover of 69.8 million shares worth 6.18 billion naira in 2,930 deals. The top trades for the week were recorded by Zenith International Bank PLC, Access Bank PLC, and United Bank for Africa PLC. Lasaco Assurance PLC, May and Baker Nigerian PLC, and Law Union and Rock Insurance PLC led the gainers charts, while the losers table was topped by Japan Oil and Maritime Services PLC, Unity Bank PLC, and Jaiz Bank PLC. Also traded in the week were a total of 125,282 units of exchange-traded products, ETPs, valued at 2.8 million naira in 11 deals. A total of 4,457 units of the federal government bonds, valued at 4.24 million naira, were traded in 13 deals. Index movement for the week showed all other indices finished lower during the week.
Thank you, Bosede. I have joining me Charles Fakraga, Chief Relationship Officer and Dealer, Foresight Securities and Investment Limited. Always a pleasure having you join us on Business Express. The President has made an announcement that he is recontesting in the 2019 elections. What impact do you think that would have on the markets?
The politics of the country has a major effect on the economy, and just like when he was elected, what we call the Buhari effect, we saw the stock market rising over 5% because there was a smooth, there was an election, the loser now considered a victory and congratulated him, and we saw that happening in the market, over 5% increase. Now that the same president that was elected, all Nigerians elected him, is now showing his interest to recontest. Of course, the market is going to react, but the announcement just came today, so let's see how the market indices will react in the coming days.
Talking about market activities, 239 billion naira was lost last week in 4 days of trading. What do you make of this?
Yes, like we've always said in this program, the stock market has its own behavior. And like you also recall, some of the securities that send their earnings reports to the market were not too encouraging. The expectations of investors were not met. So of course, when you have that kind of situation, you begin to see share prices to come down. So that's what really happened for last week. Expectations of investors were not met. And this report, as they come to the market, of course, the market will react. And that we saw the negative trend in the market for the greater part of last week.
Closed in the negative territory today. What do you make of this?
Today being the first trading day for the week, we saw large cap stock losing value, and of course that will impact on the market. However, it is still so early in the week to say whether the market is going to close negative for the week. Let's see how the numbers will be in the coming days, and of course the market is going to react. So for today, the market closing negative or in the Southwest Territory is just a continuation of what we saw last week. However, I believe that as we go along the week, we might see a reversal.
All right. Now, the MPC has come and gone, and there isn't much reaction. What do you make of this?
So like we said last week also, the indicators were all left unchanged, and of course the market expected that that to happen. So it's not an issue of whether there is no reaction or the market reacted. The indices were left the way they were, and of course we will not notice the change. Let's see as we approach this new quarter. Let's see the government coming up with the economic recovery plan. Let's see how the macroeconomy is going to play out. All the statistics from Federal Bureau of Statistics. If all these indicators, by the time they hit the market, of course, the market is going to react.
Is the lull in the capital market overstaying its chance?
Well, I will not say the trend we are seeing in the market is overstaying. The market has a cycle, the market has a trend, and it will continue this way. However, once earnings reports gets to the market, and these earnings reports are favorable, it is going to have effect on the market. And of course, investors' perception. We are just entering a new quarter. So people are trying to rebalance their book. People are trying to plan their strategy, talking to their stockbrokers before they will come out and begin to invest. So this trend is a cycle, and we're going to see a reversal very soon.
What would investors be looking out for to reverse it?
Yes, for every investor, you have your objective. Whether the market is going up or the market is coming down is a normal market dynamics. For every investor, you should be focused. do your little homework, do your research, get close to your stockbroker, invest in companies with good fundamentals, good corporate governance, and get more involved in the activities of your company. That is what investors should be focusing for now. However, for regulators, I think they should continue the good work. For operators, they should also continue to play by the rules, and we're going to see a positive trend in the stock market.
Now, activities in the bond market seem to have slowed down. It was a 4-day trading week last week. Do you think the public holidays has affected the bond activity?
You will recall that the bond sector, that space, has not been fully developed. The regulators, operators like us, we are still doing a lot of work in terms of awareness, talking to our investors, our clients, to see how they can renew their interest in the bond market, because that aspect of the capital market is relatively unknown in this part of the world. But we are doing our best, and you can see, even those few 4 days, we saw some little activity in the bond space, which goes to show that investors are beginning to renew their interest in the bond market. Of course, that is also made possible by the federal government savings bond. What I think investors should be looking at is diversify their portfolio. Equity market is going down. What about to the bond market? Diversify your portfolio and get fixed return from federal government savings bond. However, it also still depends on the investor's perception, and of course, let them do their own work very well, invest in that sector. But you don't just invest because you want to invest. Investors need to understand the dynamics of the bond space in the capital market, and that's where we operators are doing all we can to ensure that investors understand and they begin to show interest in that space.
Do you feel that there's need for more awareness for investors on the bond activities in the bond market and the issue of financial inclusion? Are these factors that should be considered?
The issue of investors' education, and when it's ongoing, even in the equities market, we will still continue to educate our clients. We'll still continue to make them be aware, because as you have said, financial inclusion, everybody should be involved. The market woman, the students, the professionals, everybody should be involved. So it's an ongoing activity, and operators, regulators are not resting. They are ensuring that we continue this campaign so that at the end of the day, the investors will become more and more aware about how to invest in both in the bond market and at the same time in the overall financial service industry.
Forecast be for this week. Do you think we are going to see a rebound in the market, or will the bearish sentiments continue?
As we are in the second week of trading, we're going to be seeing more and more earnings reports coming to the market. We're going to see more and more activity in the market. So I believe that once these earnings reports that are getting to the market, they are positive, they are encouraging, of course, we should expect a reversal of this trend.
Let's talk about the forecast for the month and the quarter. What do you foresee?
Well, for the month of April, of course, I've seen investors be very cautious. I see a lull in the stock market. That does not mean that there are no good opportunities. There are always opportunities in the capital market. So what investors should just do is to plan their trade and trade their plan. I see a positive return at the end of the month of April. At the same time, for the quarter ending, second quarter, investors should be cautious because, you know, as we approach an election year, a lot of activities will play out, and all these will depend on how the economy is being managed. So I can't really say that end of the second quarter we are going to see a positive return, but this will depend on what happens in the macroeconomy.
Big caps or small caps?
It depends on the investment philosophy of investors. If there are some investors who want to invest in blue chips, they want to invest in companies that have been paying dividend, they want to invest in companies that have good corporate governance. So it depends on your investment objective. You have to discuss that with your stockbroker, who, after identifying your objective, your risk profile, can now advise you and say, okay, this is the type of company you are expected to invest. However, the investors are the ones who will take the final decision. So invest based on your investment objective. There are some investors who want to invest in large cap companies. There are some investors who believe in investing in growth stock, depending on their risk profile. So investors should identify their investment philosophy and discuss with their stockbroker, who will now advise them appropriately.
Mr. Charles Fakraga, the Chief Relationship Officer and Dealer, Foresight Securities and Investment. Always a pleasure having you on Business Express. Now, global stocks look to shake off recent losses as China claims U.S. is making trade negotiations difficult. Musa Abubakar has an outlook of global stocks.
African equities closed mixed Friday. Nairobi SC20 declined 0.41%. Namibia overall slipped 0.62% to close 1,348.38. While South Africa JSE Africa Top 40 and Ghana's GSE Composite finish in positive territory. Stocks fell sharply on Friday as worries of a trade war between China and U.S. grew. Dow Jones Industrial Average fell 2.34% to close 23,932.76. S&P and Nasdaq Composite ended the session in negative territory. Asian stocks closed mixed on Friday after Trump's new tariff threat. Nikkei slipped 77.90 points at 21,567.52. Shanghai Composite fell 0.15% to close 3,131.84, while Hong Kong's Hang Seng Index gained 326.2 points. Europe equities ended trade on Friday lower amid escalating trade tensions. FTSE fell 0.22%, DAX depreciated 0.52%, and CAC declined 0.35%.
Let's see how currencies are trading midweek. And that's how far we can go on this edition of Business Express. The program returns midweek Wednesday. I'm Amina Nujaim. Thank you for watching.